All right, so welcome to the stream. We are going in and we're just going to do a little bit of a live session here. I'm going to go in and kick things off. I'm going to answer some of your Q&As. That's kind of going to be my goal and focus. And you can actually hop on and do a chat with me. You can pop into the panel. If there's not a lot of questions, I'll just be taking a look at some of the market stuff here as well on my screen and account on some of the other screens, as well as going in and doing some PowerPoint stuff for some of the classes for some of the members and courses here that I have coming up. So feel free to hop in and ask your questions. You can also do that on the live chat. I'll keep an eye on things, but I'm going to go in and just do also a little bit of work. It's less of a lesson, sort of say, but more of a, hey, hop in and ask questions. If you want to take a look at some stocks specifically, or you want to take a look at some option things, we can do that as well. Right now, a lot of people are kind of just waiting for Fed announcements. So as I look at kind of just the overall markets, one day doesn't make a trend. So this little bounce that we've got going on, don't get sucked into it. And that's kind of why it's a little bit more of a working session for me rather than going in and just it's not like a full trading day, because if you trade it to the long side, the calls are actually more expensive right now. And if you trade it to the put side, it's probably not ready yet till it gets a little bit higher for a few more days, and then we'll see if it kind of rolls over. So anyway, so if you have questions specifically, let me know, and we'll kind of get started to kick things off. You can hop in and ask questions. I'm also going to be working on a few little PowerPoint stuff here as I get things going on. Market seasonalities is going to be the class that we'll be doing, but it takes me a long time to do a lot of the PowerPoints and a lot of work. By the time you get everything kind of set up and going, there's a lot of work involved to making those classes going. But when things are slow, like in the markets, like right now, that's kind of what I do is look at doing these types of things. So if you want, you can hop in on the live thing, or you can also just go in and just type in a few questions. I'm going to open things up here in a second and get going here. All right. Do a quick post. All right. Okay, so let's open some stuff up here and get going. So one thing regarding the market, what I was looking at, a lot of stuff like DKNG is kind of popping up a little bit, but again, I don't chase these types of stuff. Real quick, Microsoft also popping, but you want to be careful with this pop and move here as they keep pressing into higher prices. That these things could be a gap and fade and could come back. So it's just always a little bit cautious. Netflix caught my eye a little bit as it's starting to maybe base. This could start getting into some value. I don't know, at 350. I was looking at, a problem with something like Shopify is you've got earnings coming up, and this is Zacks. I found out why some of these earnings were off when I was looking at AMD the other day. It is a bit off. So I have to double check the earnings between this versus TD and the websites, because the earnings are based on a projection from the previous year, and then they'll be readjusting them probably this week. So anyway, Boeing had a bunch of stuff going on, but you can see this is a bearish engulfing pattern, and we talked about this pattern on one of the videos right here at this 230. There's some issues right here. So we've got problems. I think 190 could be a nice level from a shorter term perspective on Boeing. So I was watching that right here. But if that breaks, then you've got 150 and some other spots as well to take a look at. How does XLE look to you today? I mean, it's still pressing higher, Jeff. I still got my shorts going on it. but I'm 45. What am I? I'll look at my live account right now. 37 days away on them. So I'm in the March 4th. I'm still short on it, but if I look at the probabilities, the ones I'm in March 4th, I'm going to look at the exact ones on my other screen. So I'm matching up my live screen here. March 4th. Okay, and I am in, which ones am I in here? Let's see, XLE. Pull it up, March 4th. I am in these right here, 37, let's see, 63 and 65. So I am in these right here, 63 and 65s right there. So the probability, and we'll switch it to the probability of touching. That's an easy way to kind of look at it. So I look at it that, look, I got a lot of time left, 37 days for this, and my chance of it actually touching is still 71%. So plenty of time. I'm okay with it. For them to pull back with a 70% chance of touching, I'm just looking for it to kiss it and then close it out. So I think it looks fine for me from a risk to reward standpoint. It looks a little toppy extended. You know, looking at some of the other stuff like ExxonMobil, I take shots on ExxonMobil and that kind of stuff too if they didn't have earnings. But because of that, that's why I did the XLE. And I think this bar or this bar, I can't recall which one I did, but I probably this one, and it's doing fine, I think, you know. So we're still in the wheelhouse. It's not too far extended. So right now the market is pressing higher, but again, one day I wouldn't say it's a trend. And you see what happens with a lot of these stocks is that right now they'll press higher. Like you see it right here with Facebook. They'll press into higher prices and sell off, press into higher, sell off. So the same thing here. Let's look at, what is the UPST I was watching too. So here we got some pressure coming in, sell back. So that's kind of what I was just looking at. It was just a lot of stuff is just, it's going to power up and then they'll press back down. So Walmart's another one that's looking toppy here. And then here, as we go, here it is. Look at that. Look at this run right here and pull back right at 10 a.m. So a lot of stuff is just, you know, they're waiting, they're weak, and they might be getting ready to pump it right now to sell into the news. So I don't know if that's what's going to happen, but we'll see if that's what's happening, because they'll suck you in to buy more and then they just dump it. And if that happens, then yeah, it could roll over even further and be even nastier. But normally what I would look to see is kind of like a pop to like stuff like halfway of the sell-off and then roll. That would be nice. That gives you a better opportunity. But if it just continues to just grind down after this, like right now, like if it just starts tanking after today, that's not good. Then you really got serious panic. But I think a lot of people will start nibbling. You know, I started nibbling right here, not there, right here, on some stuff. But you're starting to see some panic that came in at these levels, panic dives. And I told you about JP Morgan there the other day. I got into some stuff here and it's doing fine today. So, just selecting a few different things. But earnings is just right around the corner as well. So there's just a lot of earnings going on, and just kind of putting a little pause on this. So after today, we should see what's going on. The spreads are still actually not very good. Like when you look at the pricing of the spreads, they're actually still not great. If you look at the buy side versus call side, buy puts versus calls. So let's go with a 2 wide spread here, and then we'll do this spread here. What do we got? 252. Sorry, here. Not this one. Delete. And then, okay, so here we got the put. We're buying the 252 and selling the 250. So these should be very equal. But the problem with this is I'm still paying up $1.22 versus 77 cents, puts versus calls. And you're paying a huge premium to be on the call side right now. So anything bullish is very expensive. You have to really be a little more careful with markets like this, because it's a little bit of a problem. Like, even though market's going up, you're paying up for it to be able to be bullish, because you've got, let's see, can I do magnifying glass? You're paying up for it on the spreads, because I'm paying $1.20 on the calls and 80 cents on the puts. It's just, you're just way overpaying on the call side. And not to say that it can't work out, it's just that it's just way more expensive. So that's one thing that's I'm just a little more cautious about, just buying spreads right now from the call side. Selling a little puts and stuff, but nothing too crazy yet. Just we'll see how this day pans out and plays out. Okay, let's see here. What do I got? I got a market seasons PowerPoint I'm working on. Video quality is lower than usual, even when selecting 720p. Yeah, I'm trying a different attendance session today, so you guys can hop in on the live chat and ask questions by voice if you like. So it's more of a, feel free to hop in and join the chat rather than just doing everything by typing. So feel free to just ask questions. Some people want to hop in, and maybe we'll see how this goes. I haven't done one of these before from a anybody can attend anytime they want. So feel free to attend if you like. If you don't, that's cool too. I'm just seeing if a lot of people want to ask questions, because sometimes people call me and then they ask some questions on the phone. And it's simple, basic stuff that a lot of people would benefit from hearing them as well. So that's usually kind of some of the stuff. Anyway, right now I'm kind of working on a little bit on the side, as I was working on market seasons. There's a lot of different market seasonalities, from sideways markets to up grinding markets, and that's kind of what I was working on right now, is just different concepts. So I'm starting to kind of build this out for you guys. Maybe in the next 2 months it'll be done. It takes me a while to really work on it. You won't believe like the amount of time all this stuff takes. It takes forever, especially with screenshots, but it saves a lot of time later. So anyway, this is the kind of stuff that I do when the markets are slow, choppy, and that kind of thing. How do you know when the trend changes? When do you trust the bounce? The way I look at the bounce, we're going to cover this in the swing class, Jeff, actually in the next little bit. So once this swing class goes on show you the swing trading thing, we're going to cover that quite a bit on this swing trading full circle in February here. But in general, I like to see a pivot point on kind of a nice rounding or base or a retest. So if you have something that just snaps up very quickly, it's usually not enough digestion. It's kind of like after you had a big meal, you need time to digest. It doesn't matter what happened. It's just kind of like you need a digestion period. So take any stock, for example, I don't know, I'm just picking Mattel, and let's just look for a massive down move here. Okay, so this stock had trouble. Okay. And you can see what happens here is that this stock was trending down for multiple years. And it's easier to see on longer term charts for now, just as you get the practice in. This part right here is a lot of digestion, sideways, that kind of thing. Sometimes you're looking for like a huge flush of panic as well, which we got in the SPY the other day. And that kind of also can play a role. And now as you get that rounding, that's where you can kind of start looking at things. You can also look at things like moving averages that cross over. So some people will use these as they cross over certain areas, and that could be like an idea or opportunity. It doesn't necessarily mean it's fully done, but you're just kind of looking at where are we either too crazy extended one way or the other, or you're looking at where's kind of a base or a digestion. And that's kind of what I would look for. So for example, like Netflix. Like if you really look at it from a longer term perspective, we're still kind of holding levels from a longer term. But if I'm looking for a shorter term base, I'd like to see this kind of going sideways for a little while before taking a position, or I'd like to see it base a bit. Let's see this Peloton thing. If I was looking for it, like here's PayPal. I was looking at this one. It was starting to do it here, so I took an opportunity. This one I lost out on for sure. But it was a good risk to reward from a stock that was maybe down already 40%. Now you can see it still continued. And now again, you're looking for the next possible base, but this is something like a nice base to watch in these types of conditions. If you see that, the problem sometimes you see a big snap up. When you see a big snap up, I think it's more of a possible shorts taking profits or short squeezes, and that's when they can reshort it, and that's when you can go down. So you need to be a little more careful in those. Hey Ajax, how you doing? Had some put credit spreads in trouble for Netflix and Nvidia. I rolled them all the way out to May because I believe in a recovery if given enough time. Anyone else do that? Yeah, you can definitely do stuff like that. The only thing is Netflix is done with earnings. Nvidia still has earnings coming up, I think. If we look at Nvidia, that one's got earnings, and I have that actual shares in my live account, 216. So you got earnings coming up there. So that's a bit of a issue on Nvidia. But other than that, yeah, you can always roll them out to March, April. You'll roll them to May, 114 days. Yeah, for sure. Which DMA are you using on the chat? I don't know what a DMA are you using on chart. Oh, the software on the chart. This chart is EMA. Do you mean EMA? Exponential moving averages are the Fibonacci moving averages. So if you look up Fibonacci moving averages, you could use those. So here's the moving averages: 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 377. You could take your pick. You could use your own numbers as well, but these are the ones that I typically use. I use like Fibonacci equally weighted right here. These kind of are a nice baseline I've been using for a while. I don't think there's any rocket science behind them. And remember, like technical analysis is nice and great and all that, but in the end, it comes down to pricing. Like if I'm looking at pricing a spread and I go into like QQQ, and I've got prices that are wrong or off, even if you see something bullish on the chart, you're overpaying. So why would you get it? So you have to recognize that charts aren't everything. Even though a lot of people put huge influence on charts, and for me as well, like I'll check the charts, but in the end, it comes down to pricing and probabilities. It's kind of like the fundamental thing. A lot of people look at, let's say the Fed minutes, or they'll start telling you about stock reasons of why they get this one, and they're going to do this, that, and why I think the market is going higher or lower. Like it all doesn't matter. Like you're looking at probabilities. Like if you're actively trading, you're looking at probabilities. You're looking at percent success. Anytime, at any point, any trader can knock you out. Any big area firm like Citadels and all that, it's just boom, it takes you out. It's done. And then you could have had the perfect trade from a technical perspective, but if they decide to just kill it, you're done on that trade. And that's why we spread out positions at different points in different areas. So anyway, at the end of the day, it comes down to probabilities and doing a large amount of trades. Unless you're like a long-term investor, that's a different story. That's a whole different ballgame, like the Warren Buffett type stuff. Then in that case, you're buying on value, you're holding, and then you could look at the stock fundamentally and all that. But that fundamentals, they only matter like for, a year or more, 6 months plus, a year, 2 years. But a lot of people get wrapped up into watching ideas and concepts of what do I think, think of this. And those videos get a lot of attraction because I've seen you guys sending them to me. It's like, what about this? What about that? What about this guy saying this? It doesn't matter. Like, it's just a lot of stuff to just get attention. It doesn't matter. It really doesn't. you're looking at probabilities, because I could put a spread on any stock and it's a 50-50 shot, give or take, but it's a less of a shot if I have probabilities priced in my favor. Like if the spreads are, let's say I was paying up $1 for a spread on the put side and then $1.25 on the call side. Okay, and I took the put side, I actually increase my chance of success on the put side because I paid less for it. Even if the chart was kind of against me because of the pricing, right? In the end, it comes down to the price. And that's what people don't get, is that it comes down to that more than it comes down to the actual other noise and stuff. So anyway, hope that helps. Okay, what do you look for to take a negative delta position? I'm always concerned dip buyers will come in and destroy the position, so I sit in cash and wait. It depends on your allocation. Like right now, like let's say we were looking at, all right, I'll show you. If we got SPY, it's popping and you're worried about like further downside, you're thinking like, is it going to keep popping higher? Are we going to keep pressing higher? If it's an early pop, you have to be careful because that thing can keep running, right? So you could start out, like let's say we start hedging, because I have some positions on QQQ, like I have actual shares here on this one. But let's say, okay, I've got some stuff on here. Okay, so I got some bullish things, but you start nibbling. You first start nibbling. You don't start shorting like right away. It's not just like, remember, shorting is a smaller time frame and it's rough, it's fast, it's quick. But you start nibbling. So let's say I've got these 100 shares or like right here. If I'm really worried about a pullback on these soon, and this account's a little different because it has more capital in it. But I could start with like a 27-day and I could start going in. I might do like a 20 delta right here, give or take, sell. I'm just going to sell a single. Let's just do a sell a single here. And what I'll do here, this is my long portfolio, and say I'm trying to protect the portfolio a little bit. You can just take that trade, and now you've got a little bit of hedge. It's kind of like a covered, it's basically a covered call. And then what you can do is, if you're starting to get worried, right, it cuts my deltas. I went from 100 delta to now 80 delta because I put on about a 20 delta. But you know what a lot of people go wrong is now they still got 80 delta. So with time, what I'll start doing is, again, and this is spread out over across a week or two, a couple weeks, you could start actually doing the same concept. Again, this would be more portfolio margin account and some other stuff. I'll start adding in some more shorts like this. Like I'll go in and start selling another single. And now look what's going to happen is now I'm cutting my delta to 63. Okay. And I get this like little bit of a rounding thing going on. And if you go into expirations, you can see I've got a couple different things now spread out at different positions. And I can do the same thing in, let's say March 18th, 385. So I'm starting to spread some of that risk out. And now I cut it down to 45 delta. So I'm creating a little bit of a risk array here. And this is what I'm aiming to do with this spread. There we go. And the screen is not clear. It's static looking. Yeah, this is more for, we're just chatting today. So feel free to hop in, Dean. There's a link at the top. You guys can hop in and just do a voice chat. So we're just doing something a little bit more like that. It's just a working session. So I apologize if it's not perfectly clear. Can also bump up the size here for you guys. Let's try very large. There you go. All right. So now what I'm doing is I'm creating kind of like a risk array with different, that's almost too large. You're creating a risk array that's spreading your risk at different price points. So you're looking at really just spreading those different areas at different points. And I got now a 29 theta, and I'm trying to make about $753 on that premium. And that's kind of what I'm really looking at. It's just you're starting to spread that risk. Even though I got 3 calls I sold, that's okay. I only have 100 shares. I can still sell 3 calls. I can sell 5 calls, 10 calls. It doesn't matter. But the problem is going to the upside. The issue is more on the stock side. If a stock hops, I would do this more with ETFs or something like that. Okay, Nima, you say, I feel like rolling is just created in the benefit of brokers. If I would roll, isn't it better to just close the position and wait for the next opportunity for entering? Maybe. It depends on the trade. Like if you're redoing something over and over again, you could close it, wait a day or two. If the stock, let's say, is popping higher or lower, depending if you're on the put and call side, and then add on the position. But in that case, as a long investor, let's say you're a long investor. Let's see. If you're like a long investor and you're always long a stock, let's say 100 shares, if you're long the stock with options, puts or calls, and you got 100 delta, and then you close out the position, you might close it out and you might go to 40 delta, but then you're always still invested. So that's kind of the thing. Yeah, I see the stream, like they're saying, let's see, please check video resolution is set to 1280-736, not optimal. So maybe I have to do it a different way next time for you guys. I'm still looking. Okay, let's see, because I don't know how to use Thinkorswim. I need to take a course on learning how to. Yeah, so rolling is just basically if you're still in the stock or you want to stay in it at some point in the options, then you can just move it to a further date because you need more time. But oftentimes you may want to just, close things off and then reset it as well, just depending on the trade, right? So that's something to kind of watch out for. Okay. All right, let's see. Okay, anything else? Hey guys, hey Shabam, Ajax, Dean. So yeah, so right now market's just popping. It's doing fine, doing well, but I'd still always be careful with this pop higher. Like if it rolls over, I don't know what they're all doing and chatting about. We'll chat a little bit here. I'm working a little on PowerPoints. That's what I was doing. I thought, hey, you know what? If anybody hops in, we can chat a little bit on some stocks. But I'm just putting together some of this next course for you guys on a live class on different market seasons, like normal uptrending, grinding market, and then sideways markets, and then top heavy markets, and then nasty sell-off panic markets. So different trades for different things. So I'm kind of working on some of these different slides for you guys as I work on it. Then we'll do back ratio spreads here. So let's see, buying diagonals. So this is kind of what I was doing. Bearish diagonals, sell additional. Where was I? Okay, so we've got verticals. Okay, vertical tips for you guys, in case you were curious. Too much or I'll still function more like a single put. Okay, bullish diagonals. Why buy diagonals? Diagonals are great positive vega trades, and they can be a covered call alternative. And it's a lot cheaper. They're basically a lot cheaper than normal stocks and covered calls. Otherwise, a lot of people just do the diagonals if you can. It's cheaper. Okay. I don't know if you guys know, like diagonals are not bad in this kind of market condition, but you would probably do them shorter duration, because the problem right now is you got volatility at higher levels. So when you've got the VIX at higher levels and then the volatility will collapse, diagonals are actually a little bit more tricky unless you rotate them a little bit extra. So let's say you do like a caterpillar diagonal and we do in a 30-day, you'll want some additional rotation. Granted, watch out for earnings as usual. So here we'll go in We'll go like 235 right here. Okay. So right here, so you'd want that extra rotation for a positive delta on that diagonal rather than not, a small rotation, because you need that with that extra vega, you need the extra deltas. Otherwise, this thing could actually hurt your position. And even a little bit more like this. So this starts turning into more like a covered call approach right here, where you're starting to pop and it's flat line. Same thing as if you went in and bought, let's say, buy stock and you buy shares of it. And then what you do is you do the cover. Like, let's say you sold this one. It's a very similar strategy right here, because it goes up, flat lines, and with a diagonal, kind of goes up, flat lines. Okay, any thoughts on Viva Systems? Never heard of it. What is this? Viva. Kind of lighter traded, but okay, let's see. I guess newer stock maybe or something. Oh, not that newer. Okay. Let's see how liquid these options are. So looking at this trend, you are breaking that trend, but that can pull back to, let's see, the halfway point roughly. Okay, so it can pull back right here to this level, or this level, 183 or about 141 without a problem. Let me check this option market. Never traded this one before. I know why I haven't traded it before, because see, I only trade like the ones that carry weeklies, because it makes the stock more liquid usually, so it helps avoid that. So that's why it's never been on my radar as much. Volume is very light if you look at the volume, so it's one to always keep an eye on. But let's look at this short duration option market. Let's see what we've got from the open interest. I always trade very liquid stuff. You want to be one of the smallest fish in the pond, right? Open interest, it's kind of not bad. I mean, but it's bid-ask spreads are $1 bid-ask spreads. I mean, I'd say it's a tougher market to get out of. It's probably not bad getting in. It's getting out is always the problem. So technically speaking, I'd say watch some of these levels. 175. You're looking at like 120, 110, but Fibonacci levels, you kind of wrong thing. From the Fibonacci sequences, kind of watching some of these 185 and maybe 136. It's not been on my list though, because it's doesn't trade weekly options. If they don't trade weekly options, it makes it more difficult. You just can't trade it like I look at this QQQ, I can trade it Monday, Wednesday, Friday. And you can rotate those positions. I mean, you're trading like these things are nonstop and super liquid, with the bid-ask spreads being very tight. Like you got, 10-cent increments even in these kinds of markets that are very wild. 14.30 versus 14.40, it's 10 cents. Vive, and that's what a lot of people you don't get, is that you can get a hit and start a position negative just for that dollar wide spread, because it's just lighter liquidity. You've got more risk on the table with that, meaning it's just the market makers can take advantage of you guys a lot more. Okay, let's see what I got. I'm looking at my other screen here for the actual live trades. What do they got going on? Oh, Moderna's popping 6%. UPST, Nvidia, DKNG. There's a lot of stuff moving now. I'm just very cautious about it, because these things can really roll over very quickly. And the ones with most volume that actually have weekly options. So my scan here includes weekly options. And these, I've got F5 right now tanking. So again, DKNG popping. I have some longs on this one actually, and as a disclaimer, I have some longs, and as another disclaimer, you know, I have live positions on this, and I have no clue if it'll go up or down. So yeah, I do have some live positions on this one. And then what else I got? I got some other stuff. Okay, do you keep up with stock news to use as a basis to make trades, or is it better to focus on price? Yeah, no, you don't watch. You don't want to watch the news. No, 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 no. No. Remember, somebody mentioned to me about the other day, I said, I did a phrase and saying, price comes first, then the news. They're saying, no, 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 you got news first, then the price. Like, what happens if you got earnings and then you got the price? But, it's such a small micro thing that you're always going to get the price movement. Like the minute the earnings come out, you get the price movement instantaneously, and you can get the news. And it all comes down to the pricing, right? Price is way more important. The news, what happens is if I tell you, here's my thing. I like this example. Okay. All right, take a look at this color palette. What color is red? And in human words and language, what typically happens is the news can be interpreted in millions of ways because of millions of people, but it sucks you in emotionally. It ties you to it builds a bond, right? Language builds a bond with people, like us communicating right now. It builds a bond, and no matter what the news says, a lot of it is fluffy. And when it comes to trading, you're really trading based on price movement. So for me, a lot of the content that I have, it's not as fluffy and maybe not as fun. But when I say, hey, pick a color that's red, some of you guys might say, hey, it's this one because this one's in the middle. Some of you say this one, this one, this one. What if I say now, okay, pick a color that's burgundy red? And now you got a much more difficult situation, because the way that as these words start getting more, let's say, convoluted, burgundy red is starting to get more specific to what I think burgundy red is. So for somebody to say, hey, I believe Apple's a good buy, I believe Netflix is a good buy here because they're going to have X, Y, and Z, all that is for interpretation. And if you like the stock yourself already, got filled. If you like the stock itself, then in that case, you'd like what I have to say. If you didn't like the stock, then you wouldn't like what I have to say. So you're always kind of basically trying to interpret news. And if you're trying to interpret news, it's just a losing battle. You're getting sucked in. You'll be emotional. Like sometimes things will be pressing higher. Sometimes, they'll pump it because you'll feel good about it. But then all of a sudden you get this roller coaster effect because of the language. If I say the word like amazing buying opportunity, right? Let's just talk about like words general YouTubers or articles might say amazing buying opportunity. Let's say sales, record, let's say new tech or innovation, coming soon, right? All that is just noise. Exactly. It's just a lot of noise in the marketplace. There's no point dealing with it. Like if you look at like any, like there's a couple like really people that are great at trading, but what you see is their either YouTube channels or social media presence is actually very small, or a lot small, like quite small. And then, but like as you trade more, you like know they're good. But a lot of the other noise actually gets pushed to the top because people get attracted to it. So yeah, you just stay away from news. It's like here, we'll pop in, share some cool kudos for Dan Sheridan here on his YouTube channel. Because he's, but you look at him, Sheridan mentoring, awesome guy, awesome. Dan Sheridan right here, great. And you check out this videos. This guy's a market maker for years, and he taught like Pete and John Nigerian, right? You learn a ton of stuff from him. And subscriber base, 7.8 thousand subscribers. but he knows people in the industry, right? He worked with Tom Sosnoff and all that kind of stuff. But all the guys on TV, he taught them. And it's like, but then what kind of videos get the most action, right? Think about that. So yeah, it's kind of like that's why I say there's like a lot of fluff out there. It's just noise that people get sucked into. Unfortunately, people get sucked into it. They just get like, oh, and it's just the natural dynamics of human psychology. How long would you wait before entering Netflix, given the huge drop in the overall market condition? Yeah, the way I would actually, I was going to talk about Netflix today, maybe in the afternoon, and I will start it right now, but I will make more of a video on it later. So here's the way. There's a couple ways to approach it. I don't think you have to wait. Usually, I always say 3 to 7 days is kind of earnings, but I think you don't have to wait too long if you do it protected. So there's a couple of ways I could approach it. So I basically start, my objective is thinking multidimensionally, and I don't know if you're thinking multidimensionally, but let's say I think I've got verticals, I got butterflies, I'm looking for an upside, right? I could buy things. I wouldn't do anything like calendar based, but maybe a diagonal. So I'm starting to think, okay, like how would I do it? I could also do like a back ratio, which is kind of here. Okay, so I got a back ratio. So those are ways to start thinking about it, but I start allocating across the next like 10 days. You could do like 1 trade a day on Netflix. Let's say you're trying to get 10 contracts, you do 1 trade a day, spreading things out. And let's say I'm going a little longer duration. Here's an interesting twist. Here's the 37-day, super cheap bet. I'm expecting that stock to move 47 points. So let's say it doesn't do as well. Let's say it's going up like 30 points. So I've got 375 plus 30 points or so. You're looking at about a 400. Nice sweet spot. Looking for it to go kind of around that 400 level. So what you could do is just go and do a butterfly. Simple. Just start building like a position. I could start building a position on a butterfly spread for a possible up move. Now, remember what I said earlier? If you were here earlier, right now the call side is more pricey and expensive, right, on the vertical side. So you have to be nimble on that kind of stuff. But if I'm looking for a little bit of a pop, look, this gets me a little delta exposure. I'm getting about 1.5 delta. My theta is neutral. I'm putting on a share. Think of it like that. I'm adding like 1.5, maybe like 2 shares of Netflix. That's it. And if it keeps pulling back to 330, I could add another 2-3 shares. Like think of it like a longer term investor into some level. You're starting to build into it, into a position. If you think you're a little more bullish on it, you could go a little bit longer on this. But I would be careful. Use the expected move as kind of a guide. So now I'm building maybe like 2.5, because as it gets up here, the deltas slow down. So can you broadcast in a higher resolution? I'm getting 720 quality. Yeah, why don't I do that here in, let me see if I can restart it. I don't know if I can. Let me wrap up this. We're gonna try and do something more in the afternoon, maybe on Netflix as well. But I'd probably start something like this and then build a little butterfly. And then we'll go into maybe another like put vertical later on, like in a couple days, you could throw in like a put vertical on it as well. And that's how I'd start approaching it, is just slowly start building a position around it, right? It's like playing a game, a board game. You're building a position around what's going on. And you're trying to kind of just slowly start stepping into it. Is a high VIX at 30 a good reason to short something since it seems to pull the market down? No. Is a high VIX at 30 a good reason to short something? No. High VIX just means option prices are more expensive. So just because the market is, the VIX and the fear is high, it doesn't mean it's a good time to short. Actually, if you want to short, the way to short, I'll tell you right now, you wait for this thing to go to maybe 450 or 460, and you short it on an up day, not because it's a high, not because the VIX is high, but you're shorting on big moves up, and that might be it to hedge or protect your position. But just because the VIX is high, like this thing can crash, like the VIX can crash. Like, look, it was high right here, and now it's way lower. So no, I would not short because the VIX is high. It's high at the 30s, but if you short something, you're expecting the VIX to go higher. And if that's the case, then by all means, no problem. But if you're thinking the market's going to recover, then, again, just depends what you're doing. Are you shorting for a hedge? Is it a hedge? Is it a trade? Like, what is it? A hedge is for your long portfolio. You're like protecting it. Or for a trade, it's like just temporarily doing something. So you got to kind of know, but I wouldn't short because the VIX is high. Just because the VIX is high doesn't mean you short. There's got to be other underlying things, like for what reason and how are you going to do it? How are you going to take profits? How do you build the position out? That kind of stuff. That's how you want to start looking at some of these things. Starting to allocate positions at different points. Yeah, I would fade. Basically, I would fade an up move on a downtrending stock. Exactly. And when you get a nasty sell-off like that, like we've had, I could tell you a lot of the big boys are probably going to short into it a second time. Because you look at any stock, you pull it up. Like look at Goldman Sachs. Let's just pull this up. Smart guys, right? Probably the smartest traders, as they say. But look, let's just take this downtrend. Then we've got an uptrend. Everything's rosy, right? No, it comes down again, usually 2 or 3 times. So they'll do that 2 or 3 times until you get a base. So you don't short just because the VIX is, no. You short on an up day, a big up day, right? It usually coincides. Big up day. Look, these up days are minimal. Big up day like today, but it only had like 1 day to digest it, would basically be a possible shorting opportunity, but you'd want to see it. The other thing you could see is a stalling thing. Like if it's just like stalling at the highs, like stalling, and then it'll just die. But yeah, you're looking for a pop, for a good pop, okay, little pop, and then it rolls over, pop and roll. And that's what you're looking for. So I wouldn't do that. So here, same thing, sold off, it's going to pop. There's when you short. And you're shorting for a smaller time frame usually. What did I get filled on? I got filled on something again. Ding, ding, ding. There's my Netflix. Okay. Patience pays, I guess. Top bottle. Yeah, it's top heavy in some areas. So yeah, so just on anything right here, like look, we got a gap here. This thing can easily skyrocket here. And a lot of people say it's a great buying opportunity, all that, but you still might get another move down. Okay. So that's kind of what you're looking for. All right. Hope that makes sense. Okay. Let's see what else we got. This Palantir, right? All that. Western Digital, same thing. Like, look, stock is toppy, sideways. You test it, short, right? So we're short a break here. You could do it on a break. You could do it on a big up bar, gap bar right there. It took time for that short to pay off. You don't always catch it. Like this bar right here was huge, gap up bar. And it took almost a couple weeks for that short to pay off. But then it did, right? So usually a big bar. That's why, for me, I shorted the XLE. It's not working, and it may not work. But on those big up bars, I shorted those stocks. And even now, like when you look at it, like, hey, it might not work out. Like the volume is there. I know it's there. But it's to help hedge and protect some of the other offset positions that I have that are fully only long. Because otherwise you have all long positions, and then that's all you've got going. So you always want to be mindful of that kind of thing. Like I don't want to be all bullish. I don't want to be all bearish. IBM. Like look at this. Jeff played this one before. TSM short, huge pop, right? Huge pop bar, done. Gap and fade. Microsoft, we'll see if it follows through, but same thing. Like we see they pop big and they fade. So, but those are smaller time frame. anyway, I think I'm going to take a breather break. You guys are saying the video resolution is not great, and then we'll kind of go from there. Maybe I'll pick some things up with Netflix. We'll do some stuff there on the other channel. Show you some option stuff there, and do some video recaps quickly, because right now it's just still going to chop for a little bit till things calm down. So anyway, enjoy the rest of the day. I'm going to work on some PowerPoints here and get back to you guys maybe in the afternoon after lunch. So have a good one. I'll take care.